You're welcome to episode 2 of Making It Count, Legal Accounting Made Easy with Benji. My name is Benjamin Ofeado, and on this episode, we'll be looking at what accounting is and who are the users of accounting information. By the end of this lesson, we should have been able to define what accounting is, how it differs from bookkeeping, and also who are the various users of accounting information. So now let's get into it. One may ask, what is accounting? So accounting is a mechanism or set of processes for the initiation, recording, processing and classification, summarizing, and reporting of financial transactions for the purposes of communication, analyzing, interpreting, and supporting decision making of various users of financial information. I'll take that again. So accounting is a mechanism or set of processes for the initiation, recording, processing and classification, summarizing and reporting of financial transactions for the purposes of communicating, analyzing, interpreting, and supporting decision making of various users of financial information. From this definition, clearly there are a number of elements we can identify. The first one is that accounting is a mechanism or a set of processes. So that is the very important thing you need to take cognizance of. Accounting is a mechanism or a set of processes. The second thing you would see is the detail of those sets of processes. And those sets of processes are the initiation, recording, processing and classification, summarizing, and reporting of what? Financial transactions. So that's the second element you identify here. The various activities or processes involved in accounting. That is the initiation, recording, processing and classification, summarizing, and reporting of financial information. And what is the purpose? The purpose is what you find in the third element. It is for the purposes of communicating, because financial information needs to be communicated for the various interested parties in it. The second thing or second purpose is for the purposes of analysis. Financial information is to be analyzed to provide insights. And then the third purpose here is interpretation. It brings meaning from the analysis. Meaning is made, and so that is where the interpretation comes in. And then the fourth purpose is, having gone through these levels of communication, analysis, and interpretation, now it helps for the purposes of supporting decision making. You understand that? So these become the third set of elements you identify in the definition. And then the final element you find, which is the fourth element, is for the purposes of the various users of accounting information. And so you realize that there are beneficiaries of what accounting information is. And so the various beneficiaries also exist. So that becomes the fourth element. So if you forget anything, remember this. Accounting is one, a mechanism or set of processes. That is one. And those processes are 5 stages. The initiation, the recording, the processing and classification, summarizing, and reporting of financial information. Then the third element is the purpose of accounting. It is for communicating, for the purposes of analysis, for interpretation, and then also supporting decision making. And then the fourth element, of which people, the various users of accounting information. So that is accounting. Now, let's ask ourselves, how does accounting differ from bookkeeping? You'd realize that accounting, as we have seen it, has a number of processes or activities involved in there. It so happens that bookkeeping busies itself with basically recording of accounting information into the primary books of accounts and the various ledgers. So what bookkeeping is the recording of accounting information into its primary books of accounts and various ledgers. So when you now look at bookkeeping within the context of accounting, we mentioned 5 different activities: the initiation, the recording, the processing and classification, summarizing, and reporting of financial information. What bookkeeping is just at the second level, which is the recording of financial information. And so bookkeeping, you can say, is one element of the entire process of accounting. So you'll be right when you say bookkeeping is a subset of accounting. I hope that is clear. Good. Now, let's look at the third thing for our lesson on this episode. Who are the users of accounting information or financial information? There are 2 broad groups of users of accounting information. There are those that we call the internal stakeholders, and there are those we call the external stakeholders. As the name suggests, internal stakeholders are stakeholders who are directly or primarily involved with the setup, ownership, and operations of a business or organization. Whereas external stakeholders are those who are not, as simply as that. So the internal stakeholders are those who are primarily part and responsible for the setup, ownership, and operation of a business or organization. Whereas the external stakeholders are all other stakeholders aside from the internal stakeholders. So now let's look at who the internal stakeholders are and what their interest in accounting information are. The first of them are the owners, those we call shareholders or the members of the company. They are interested in the accounting information because it helps them to appreciate how well their business is doing, which would inform the returns that will be inuring to them as owners who have set up the business. Those returns may come in the form of dividends that will be paid to them or the appreciation of their capital investment. So those are the owners. Then there are the managers of the organization or business. And for the managers, it helps them to have a sense of how well they are doing managing the business, how much of returns through their running of the business they are bringing to add to the organization, and helps them to take further decisions as far as the running of the business and engagement with other stakeholders are concerned. Then there is the third internal stakeholder, the employees. So the employees of a business are interested in the accounting information of a business so that they know, for instance, how longevity can inure to the business, hence their jobs will be secured. And so for them as employees of the business, will they still have a business to be working for? And so employees will be interested in the accounting or financial information of a business or organization. Now let's look at the external stakeholders. So the business deals with suppliers who provide goods and services for the organization. So suppliers will be a key external stakeholder who will be interested in the financial or accounting information of the business, because they want to know that the business will still be in existence for them to continually provide services for, and if the business will be able to pay them when they provide those goods and services for them. So that will be one of the main interests of suppliers. Then there are customers, and customers place reliance on the continual supply of goods or services by the organization. So a customer will be interested to know that they can continually depend on this business to provide them with services or goods. So the customers are the other interested parties. Then there are lenders. Lenders provide credit or loans to businesses or organizations. They will be interested in their financial information to be sure that when they provide those loans for them, they will be able to meet their loan or credit obligations. And so there are lenders. Then also there are governments. So governments will be interested in a particular business's financial information. For instance, to know that, one, the business will still be in existence and that it will be able to continually provide employment for the various people within that jurisdiction or the economy. And so that will be of interest to the government. Additionally, the government will be interested to know their financial performance and position to help the various government tax authorities to assess those businesses for taxes, all forms of taxes. Then there are also regulators. So regulators will be interested in knowing how well the business is complying with various reporting standards to ensure that they are compliant. So there are also regulators. Then there are also trade associations who will be interested in the financial information or accounting information of organizations, because it helps them to be able to put together industry data about the various operators or players within the industry. Also, there are external stakeholders, including investors. So investors are interested in the financial or accounting information of a business to help them take a decision whether or not to invest into such businesses. So that is very important for them as part of their consideration in making a decision whether or not to make an investment into a business or organization. Also, there are competitors. Within every industry of operation of any business, there are competitors, and competitors would want to know how well their competition is performing to help them to benchmark their own performance and also to strategize as to how to play within the industry or market. Then there are financial analysts, and a lot of financial analysts in their analysis of the performance of an industry, a market, or economy will be interested in the financial or accounting information of various organizations, and that will help them draw the necessary insights for the purposes of their analysis and conclusions. And then there is the general public. The general public take a lot of interest in the financial performance and position of various organizations because these operations of these businesses are within their communities. So they are interested to know, will these businesses continue in the foreseeable future such that they can have their own people even get employment in these organizations, or even for them to continue to provide services to the various communities that they find themselves in, or the extent to which they are even complying with certain environmental standards which impact these communities, hence the general public's interest when it comes to the financial information or accounting information of businesses or organizations. And so, as you can realize, there are multiple interested stakeholders when it comes to the accounting or financial information of every business. And so that is this episode what accounting is and what the various uses of accounting or financial information are. So just by way of recap, we have learned what accounting is, and we learned that accounting is a mechanism or set of processes for the initiation, recording, processing and classification, summarizing and reporting of financial transactions for the purposes of communication, analysis, interpretation, and support of decision making by the various users of accounting information. We were also able to distinguish between accounting and bookkeeping, establishing that bookkeeping has got to do with only the recording of financial transactions into the primary books of account and the various ledgers. So bookkeeping is only a subset of what accounting fully entails. And we've learned that there are various stakeholders or users of accounting information. Internal stakeholders comprising primarily owners, managers, and employees. And for the external stakeholders, we spoke about suppliers, customers, lenders, governments, regulators, trade unions, investors, competitors, financial analysts, as well as the general public when it comes to the financial or accounting information of various businesses or organizations. So this has been episode 2 of Making It Count, Legal Accounting Made Easy with Benji. Let's meet on the next one.